Hi Crypto Peeps, hope you're doing well. Today's date is 13th of July 2022, and right now as I'm looking at Bitcoin is sitting at around about 19,790. So a small dip this week, but still hovering around about the 21,000 mark. Hope you're doing well, hope you're hodling in there, and I hope you're looking at all the latest news to find out what's happening. And talking about finding the latest news, let's start right off here with the first article, which is on bitcoinnews.com. And this is titled, Bank of America is bullish on Bitcoin. So let's have a look at this. So Bank of America is leaning bullish on Bitcoin after it recently shared an optimistic Bitcoin chart in its June 2022 Global Research Report. The chart depicts Bitcoin surviving numerous crashes over the years, rallying each time to an all-time high. Bitcoin has been called a bubble by several crypto critics, including Warren Buffett and his right-hand man, Charlie Munger. However, looking at the chart below, it is clear that the digital commodity has been making higher highs since its inception, despite witnessing crashes of more than 50%. And here's the chart everyone's talking about here, and it's on someone's tweet, Lynn Alden's tweet here. The chart was originally created by Lynn Alden, founder of Lynn Alden Investment Strategy, who remains super bullish on Bitcoin. She pointed out that Bitcoin has dropped significantly multiple times in the past, but in the longer run outperformed multiple asset classes. There's the chart there again, and there's her showing it being used in the bank's screenshots. She says, I haven't found another asset that went to new all-time highs after this many separate 50% plus drawdowns. Bank of America recently concluded a survey where it revealed that over 90% of respondents plan to buy Bitcoin by the end of 2022. And this was a survey where of around about 1,000 people, and more than 90% of the participants have planned to buy Bitcoin in the next 6 months. A senior Bank of England analyst appeared on CNBC to discuss the survey, and when asked why people wanted to own Bitcoin, he mentioned that using it for payments was interesting because a company like Coinbase could link with merchants and allow people to spend their assets without doing the spot conversion themselves. Interesting news there, so that's the first one of the day. Next one here on CNET is someone lost millions trying to claim $2,000 of crypto in an airdrop. A scammer swindled $8 million in Bitcoin and Ether by targeting users of Uniswap, a popular crypto exchange. That $8 million came from just 2 victims. Airdrops may be the most bewildering facet of crypto, referring to tokens being rewarded to crypto traders that fulfill certain criteria. They often amount to free money, and the amounts dropped can be immense. In April, Bored Ape Yacht Club owners received a cryptocurrency airdrop worth around about $100,000 for every ape NFT they owned. Sometimes airdrops that sound too good to be true are legitimate, but not always. On Monday, scammers made off with $8 million in Bitcoin and Ether after employing a phishing scheme. The scam centered on Uniswap, a decentralized crypto exchange where people traded altcoins like Shiba Inu and Avalanche. The scammers promised a free airdrop of 400 Uniswap tokens worth around $2,000. A few traders took the bait, connecting their wallets to the dodgy website, and 2 victims sustained huge losses. Over $6.5 million was drained from one wallet. Scammers took 2,444 Ether worth 2.46 million and 201 Bitcoin worth 3.96 million from the wallet. The other wallet lost 834 Ether worth $903,000 and 39 Bitcoin worth $774,000. PeckShield told CNET that there are 4 more wallets infected by the phishing attack, but these have not yet been drained. There's more information here, so if that one interests you, have a look at that. With all these news bites, the links are down below. I'm only reading snippets of the news here, little bites of information. If you want the detail, have a look at the links and do a lot more research. On Fortune here, this is interesting as well. The bond yield is trying to tell us something about inflation, and Bitcoin is more closely tied to it than ever. Bitcoin's fortunes are more closely tied to the US real or inflation-adjusted bond yield than ever, with the two increasingly moving in opposite directions. At press time, the 90-day correlation coefficient between Bitcoin and the yield on the 10-year US inflation index security stood just shy of the record at minus 0.95 reached by the end of June. The record inverse or negative correlation means Bitcoin is moving in the opposite direction of the inflation-adjusted yield. A positive yield means that the bond payout is exceeding the market-based measures of inflation expectations. Therefore, the higher the real yield, the lesser the incentive to chase returns from other assets like cryptocurrencies, stocks, and gold. So it's no surprise that Bitcoin technology stocks and gold have taken a beating this year, alongside an uptick in the real yield. The real yield has surged by more than 172 basis points to 1.72% this year, thanks to the Federal Reserve's plans to drain liquidity with rapid-fire interest rate hikes and balance sheet runoff to fight the rampant inflation. This record negative correlation means the possibility of Bitcoin plunging below the June low of 17,601 cannot be ruled out should the real yield continue to rise. It goes on to say here, the Fed is likely to raise borrowing costs by 75 basis points later this month, bringing the benchmark interest rate to a range of 2.25% to 2.5%, from original 0. to 0.25 at the start of 2022. Further, the Fed funds futures have priced a 50 basis point hike in September and a 25 basis point hikes at November and the December meetings. Interesting news there, so keep an eye on that one. A great and funny bit of FUD here on Bitcoin.com. I call this a bit of FUD because it's just ridiculous, really. But Charlie Munger says everybody should avoid crypto as if it were an open sewer full of malicious organisms. The Berkshire Hathaway Vice Chairman Charlie Munger, Warren Buffett's right-hand man, has a message for investors considering cryptocurrency. Never touch it, he stressed, adding that everyone should follow his example and avoid crypto as if it were an open sewer full of malicious organisms. Charlie Munger, Warren Buffett's right-hand man and longtime business partner, threw more insults at cryptocurrency in an interview with the Australian Financial Review published Tuesday. He had previously called Bitcoin rat poison, and he said last year that he hated the success of Bitcoin. Noting that the crypto craze is a mass folly, he told the publication, "I think anybody that sells this stuff is either delusional or evil. I won't touch the crypto." The executive continued, "I'm not interested in undermining the national currencies of the world." He was then asked what advice he would give to other investors who may be considering investing in cryptocurrency. He said total avoidance is the correct policy. Never touch it, never buy it, and let it pass by. So there's more information there if that would interest you. I thought I'd put in the FUD of the week there for you to have a look at that one. Absolutely ridiculous and stupid statement. But never mind, everyone's allowed an opinion. So on City AM here, Bank of England lays down crypto regulation following the crash. It says the Bank of England laid down its plans for crypto regulation in the UK following the drastic instability from the crypto winter. Deputy Governor said the bank would apply identical regulation to different financial services in the UK, regardless of how they are provided, if the risks presented by them are the same. As such, crypto activity that poses risks similar to traditional financial activities will be subjected to the same regulations as traditional financial activities. Where regulation cannot be applied in the same way, the same level of risk mitigation should apply, he said. The extension of the regulatory framework to encompass the use of crypto technologies must be grounded in the iron principle of the same risk, same regulatory outcome. He said this during a speech today at the British High Commission in Singapore. He also went on to say that given that the Bank of England is responsible for regulation and supervision of systemic payment systems in the UK, our intention is to apply the same risk, same regulatory outcome approach in the UK. He urged for an international approach to this, saying it would only work if carried forward across international standards and that those standards need to be incorporated into domestic regulatory regimes. He goes on to say, where risk cannot be mitigated and managed as necessary, such risky activities should not be allowed to proceed. He then went on to say, the crypto winter underscores the need for regulation as crypto's speed of growth and connection with traditional finance poses a risk, adding that the boundaries between the two could become blurred. A widespread collapse of the crypto asset valuations has cascaded through crypto ecosystems and generated a number of high-profile firm failures, he said, adding that most crypto assets were inherently volatile, very vulnerable to sentiment, and prone to collapse, while diminishing claims of Bitcoin being a volatility and inflation hedge. So, moving on here to The Verge, liquidators for crypto hedge fund Three Arrows Capital say they can't find the founders. What a surprise on this one. Where in the world are Su Zhu and Kyle Davies, the founders of the cryptocurrency hedge fund Three Arrows Capital, or 3AC. They're nowhere to be found, according to officials charged with liquidating the bankrupt company. According to a court document filed Friday, the whereabouts are currently unknown, and its liquidators say they have not received any meaningful cooperation from the two. On Tuesday, a judge granted 3AC's liquidators full control of their assets, preventing them from transferring any money out of their accounts. The Singapore-based 3AC filed for Chapter 15 bankruptcy earlier this month, a move designed to protect foreign companies' assets from creditors in the US. News of the bankruptcy filing surfaced after 3AC defaulted on a $670 million loan provided by crypto broker Voyager Digital, which has since filed for bankruptcy as well. It goes on to say here, Russell Crumpler and Christopher Farmer, two senior directors at Tenno, claim they have been unable to get in touch with Zhu and Davis. In the court filing, Crumpler and Farmer alleged they joined a Zoom call with the persons identifying themselves as Zhu and Kyle, but their video was turned off and they were on mute at all times, with neither of them speaking, despite questions being posed to them directly. More information on that one there, if that one interests you in any way. We're going to see a few more of these go under, so bear with that. So on Finbold here today, US federal researchers say digital dollar may improve rather than worsen financial security. One of the primary worries raised concerning a central bank digital currency, or a CBDC, is the possibility that it might increase the frequency of run-on banks and other financial intermediaries. However, a new working paper by two US federal researchers for the Office of Financial Research, published on July 12th, suggests two ways in which a CBDC can strengthen financial stability rather than damaging it. The research investigated how the stability of the banking system will be impacted by the introduction of a CBDC, and the author stated, "Our results suggest that a well-designed CBDC may decrease rather than increase financial fragility, and a CBDC may tend to improve rather than worsen financial stability." So have a look at this in detail. If you look down below, it shows you how they did the research on this and their further thoughts on this as well. Interesting. I'm not a fan of CBDCs, but if you are, have a read of that one. So moving on here to The Guardian, and this is quite a terrible article to be honest, but the people involved should have known a little bit better. So they couldn't even scream anymore. They were just sobbing. The amateur investors ruined by the crypto crash. I'm not going to read all this, but it basically goes on here about one main person here. It all started February 2021 when a radio advert for Dogecoin, a cryptocurrency promoted by Elon Musk, intrigued Roy, and he started Googling, eventually using his credit card to make an initial investment of $2,500 in a range of cryptocurrencies. The value of Roy's portfolio climbed to $8,000, then $100,000, then $525,000. Roy entered the market during a period of price growth. A combination of COVID stimulus packages, low interest rates, and unprecedented level of enthusiasm meant the ball was careering out of sight. But as you can guess, this went bad for him. It details it all below here, and it details other stories as well about people that are having a bad time. I have to be honest, Roy's story is pretty bad because he did overextend himself. He made some bad decisions, and he seems to have, looking at his profile here, he seems to have one of these personalities that gets addicted. You know, he has a drinking, gambling problem. So, you know, read that, have a look and see what people are doing. You know, it's good to see this kind of stuff out there. It's a little bit of FUD in the industry, but, you know, it's also a bit informative, telling you never spend more money than you can afford to lose. Okay, so moving on now to this article on the Motley Fool. Not always a big fan of cryptos, but 3 cryptos beaten down in 2022 that are ready to bounce back. After generating incredible returns through 2020 to 21, cryptocurrencies have come to a screeching halt in 2022 as the easy monetary conditions that helped them thrive have come to an end and interest rates have risen. Furthermore, many participants in the industry have exacerbated the downturn, shooting themselves in the foot by taking on too much leverage and being caught offside when crypto prices declined, which triggered a wave of forced selling and insolvencies, and this has driven the price down even further. It says here, as the dust clears and the leverage unwinds, the cryptocurrencies could bounce back in the second half of 2022 and give crypto investors something to cheer about. First one on its list here is Bitcoin. As with stocks, a bear market is a good opportunity to pick up blue chip names while they are down. While it may not be the revolutionary choice, Bitcoin is one of my top candidates to bounce back over the second half of 2022. Moving on is Ethereum, getting ready for the merge. Like Bitcoin, Ethereum is a blue chip cryptocurrency that is down substantially, having experienced a 75% decline from its all-time high of $4,847 last November. Ethereum is down 68% year to date, but the back half of the year is already setting up nicely for the second largest crypto by market cap. So have a look at that one. And its third choice here is Chainlink, a truly differentiated crypto. Outside of the blue chips with the largest entrenched user base and biggest market caps, other cryptocurrencies will need to have truly differentiated models or compelling real-world use cases to bounce back and succeed over the long term. One compelling example would be Chainlink. Chainlink is an oracle chain, meaning that it enables smart contract platforms to put in information from the outside world in order to ensure the accuracy of smart contracts. So have a look at that information if that one interests you in any way. I think that's a good choice, to be honest. Very good choice, in fact, and 3 of the cryptos that I'm most invested in. So then we're going to move on to 3 news sources here. I always do this each week because, as I said, YouTube is an amazing resource for information, so please use it. The first one here is on, is on a pretty standard TV station. It's on CNBC Crypto World, and it's talking about Bitcoin dips, Saylor dubs Ether a security, and what caused cryptos crash. So that's a really interesting one. So have a look at that one. That's a good start, and maybe subscribe to it, get their information. It's a bit standardized, but it's good information, whatever. The next one here is a new one for me, Lark Davis. He does regular information on financials and investments, and he talks here about the biggest stock and crypto crash ever and Michael Burry's warning. And Michael Burry is a famous person from The Big Short, played by Christian Bale in the film. So he made a lot of money during the last housing financial crash. So a lot of people take what he says quite seriously. And the final video here, this is a great favourite of mine, Altcoin Daily. They put out a video every single day. They're very informative, very unbiased. They really know what they're talking about. And this is a great interview with Sam Bankman-Fried, who is seen to be bailing, crypto billionaire that's bailing out a lot of companies at the moment. So his opinion is very valid. And he talks about the crypto market and has it just bottomed, and maybe buy Bitcoin now. So have a look at those 3 videos. So that's it this week, guys. As you know, the crypto world's in a bit of a state right now. It's up and down, or in my opinion, it's going a bit sideways at the moment. But it's a good time to buy if you have the money. But never overextend yourself. Never use more money than you can afford to lose, because cryptos go down and investments go down just as much as they go up. Anyway, try to have a great week ahead. Please leave any comments down below. Let me know anything you want me to look at in particular. It's great seeing your comments on our forum. Thanks for supporting us for another month, and take care, and I'll see you next week. Bye.